Yeah, I feel better. Listen, keeping with this theme here about how the markets react to what's going on in the world right now, how the markets react day to day, how the market reacted to the president today, and what that means to you. Because here's the thing with all of the self-quarantining and all the cancellation of school and the cancellation of large public gatherings and people not going out to restaurants and the kids staying home from school and you having to stay home from work because the kids are staying home from school, this is going to have a huge effect on our economy, your personal economy and our nation's economy, and you need to make wise choices with your own personal finances. And oftentimes refinancing is a great way to alleviate some debt, lower your expenses, get money in your pocket. But what are the rates doing right now? Mark Livingstone, president of Cornerstone First Financial. You hear him here on WMAL on a regular basis. Mark, I took a look at the rates today. They weren't doing what I thought they would do at times like this. Usually we'd have really low rates right now, but what happened yesterday?
These are unprecedented times, my friend. Good to talk to you. Yes, Larry, we are off our lows of this past Monday. The lowest interest rates have ever been recorded. We're talking the 30-year fixed rate with 0 points was down at 3%, okay? And as of today closed, they're at 3.99. Now, why the discrepancy?
Yeah.
Because, as you know, the market was just all over the place, very topsy-turvy, and there was panic. And what happens when the markets panic? And so we saw, as you know, over the last couple of months, the rates coming down. We were at 3.5 on a 30-year fix. We were at 3.3 last week and the week prior. And then, boom, Monday, the floor fell out. Rates came down to levels we've never, ever seen. And then all of a sudden on Tuesday, they start trickling up a little bit. In fact, some lenders stopped honoring rate locks because they got so busy they had to artificially inflate the rates to stop the just influx of rate locks coming in.
Wow.
So as the weeks went on, the rates just kept going up due to the instability. And so usually, Larry, the 10-year treasury is what dictates the interest rates.
Right.
And the mortgage-backed securities follow suit with the 10-year treasury. Well, for the first time in history, we saw what I'm going to call a decoupling. They started going in opposite directions. So when the mortgage-backed securities were going up, the 10-year treasury was dropping. And then the reverse. As the mortgage-backed securities started dropping, the 10-year treasury went up. So we just saw rates literally an entire point. Go ahead. Is
this decoupling just some sort of random temporary phenomenon, or because there's some talk about the Fed lowering the institution to institution rates to almost zero to help stimulate the economy, but you don't expect the mortgage rates to follow suit then?
No, I think that there's such instability in the market right now that the dust has to clear, and then the interest rates will come back to realistic levels. I mean, having 3% on a 30-year fix is just unheard of. That's outstanding. And then if they hadn't shut it down a little bit, based on what the 10-year treasury was doing, the rates would have kept going.
So
These lenders...
What should people do if they're looking? It's like, geez, I don't know what's going to happen with my work situation in the next several weeks. I got to reduce my costs. Getting a lower rate right now would lower their monthlies, if their mortgage. What should they do given the bizarre nature of where the rates are bouncing right now?
Well, what I'm telling all the loan officers today is that, hey, take the people's call, get their information, find out what their goal is, find out what their interest rate is, and just tell them to be ready. Be ready, because when rates do come back down, which they're going to, that they'll be ready to lock that rate in and get the absolute lowest rate and best savings. Right now, so far, quarter 1 of 2020, we saw $12 billion in mortgage originations. In 2019, the entire year was $3.5 trillion.
Wow.
So it's almost 4 times what they did the entire 2019, the entire year, has been completed in quarter 1, 2020.
We're talking to Mark Livingstone, Cornerstone First Financial. We're just out of time, but just in terms of perspective, because you've been doing this in this area, Mark, for a long time. Have you ever seen anything like this?
I've never seen anything like this, ever. It's just, and it's an exciting time, but it also, if you don't keep your wits about you, it can get kind of nerve-wracking. Like I said earlier, it's unprecedented, and it's kind of exciting.
Be smart. Talk to experts. Mark's one of them. Mark, thanks for joining us today on this very
my pleasure, Larry.
Fascinating
and have a great weekend, my friend.
You bet. It is 5:24 on WMAL.